The vault door was supposed to open, but instead the office lights went dark. The phones stopped ringing, and somewhere between the polished marble floors and the silent elevators, billions of dollars vanished without a sound. And there is one detail about where the gold was supposed to be that changes everything. Before we go any further, tell me in the comments where you are watching from, because this story crossed borders faster than money ever should. And if you love scam stories where luxury hides, lies, and trust becomes the weapon, subscribe to ScamSphere, because this illusion only gets darker from here. Dubai did not become the city of gold by accident. For decades, it built a reputation that felt almost untouchable. Skyscrapers rose from the desert-like monuments to certainty. Gold souk glittered under bright lights. Vaults, refineries, and trading hubs formed an ecosystem that told the world one simple message: wealth here was real. Gold was physical, honest, permanent. In a world of unstable currencies and fragile institutions, Dubai sold reassurance wrapped in metal. That reputation became the perfect disguise. The gold trading investment pitch arrived quietly, spreading through private conversations rather than advertisements. It promised stability, not excitement. Investors were told their money would be pooled to buy physical gold, stored securely in Dubai, then traded through established channels for consistent monthly returns. Nothing flashy, nothing reckless. Just disciplined trading backed by the oldest store of value known to humanity. The returns were framed as conservative, which made them believable. Not too high to seem absurd, not too low to feel pointless. Enough to outperform banks while sounding professional. Contracts were clean. Logos looked corporate. Offices were modern and expensive. Everything about the operation communicated legitimacy. For many investors, this was not speculation. It felt responsible. The companies behind these schemes understood something critical about trust. People trust what looks familiar. They trust polished reception desks, framed certificates, and employees who speak calmly about risk management. Some firms even arranged tours, showing clients gold bars behind glass, allowing them to feel the weight. See the shine, smell the air of a vault. The amount displayed was small, symbolic, but the effect was powerful. The illusion did not need scale, it needed belief. The money flowed in steadily. Early investors were paid exactly on time, reinforcing confidence. Word spread through communities, especially among expatriates and migrant workers who already associated Dubai with opportunity and safety. Friends told friends. Relatives told relatives. Trust multiplied organically, which made it far more effective than any advertisement ever could. What most investors did not realize was that they were not investing in gold. They were investing in a story. Behind the scenes, there was no massive gold trading operation capable of generating the promised returns. There were no consistent export records, no matching import data, no verified transaction volumes aligning with the scale of funds raised. These were not oversights, they were absences. The system was not designed to trade gold. It was designed to circulate money while maintaining appearances. The structure followed a familiar pattern, one as old as financial crime itself. New deposits funded old payouts. Returns were not profits. They were recycled trust. As long as fresh money entered the system, the illusion remained intact. And because the scheme moved slowly and patiently, suspicion stayed dormant. When questions emerged, they were managed carefully. Investors asking to withdraw were encouraged to wait for the next trading cycle. Bonuses were offered for reinvestment. Delays were explained with market conditions, regulatory reviews, or temporary liquidity constraints. Each explanation sounded reasonable on its own. Together, they formed a wall of reassurance. The darkness of the scam was not just financial, it was emotional. Many victims were not wealthy speculators. They were ordinary people chasing stability. Some sold family jewelry. Some liquidated savings meant for education or retirement. Some borrowed money to increase their investment, convinced they were making a safe, disciplined decision. Trust became the most valuable asset in the system. Then the silence began. Offices closed without warning. Websites disappeared overnight. Phone numbers stopped working. Emails bounced back unanswered. Employees claimed ignorance or resigned suddenly. Executives became unreachable. In some cases, companies issued vague statements blaming market disruptions or regulatory freezes. In others, there was no explanation at all. Investors rushed to the offices only to find locked doors and empty rooms. The gold they believed was stored safely in Dubai was suddenly unreachable, untraceable, and possibly non-existent. Panic spread faster than the original optimism ever had. The most devastating realization arrived slowly. There was no vault filled with investor-owned gold waiting to be liquidated. At best, there were small quantities used for display. At worst, there was nothing. The gold had always been an idea, not an asset. Authorities across multiple countries began receiving complaints. Jurisdiction became a maze. Some companies were registered in free zones. Others operated through offshore entities. Bank accounts spanned multiple countries. Responsibility blurred. Investigations moved slowly, and the money moved faster. Victims waited. Some for answers, some for justice. Some simply to understand how something that felt so solid could dissolve so completely. Dubai itself was not the scam. The scam borrowed Dubai. It used the city's reputation, imagery, and symbolism as camouflage. Gold souk, skylines, and luxury offices were marketing tools, not proof. The city of gold became the costume worn by deception. As the full picture began to emerge, one truth stood out above all others. This was not a single scam. It was an ecosystem. When one scheme collapsed, another appeared under a different name, offering the same promise. Gold trading, safe returns. Dubai, the illusion thrived because it exploited something fundamental. In uncertain times, people cling to what feels permanent. Gold feels permanent. And belief, once established, is extraordinarily difficult to dismantle. By the time belief finally broke, billions were gone, lives were disrupted, and trust was permanently damaged. The city of gold remained standing, brilliant and untouched, while in its shadow, the truth waited to be uncovered. When the money vanished, certainty vanished with it. Investors returned to offices that no longer existed, refreshing email inboxes that never responded, dialing numbers that rang into silence. The confidence that once surrounded the gold trading schemes collapsed into confusion and disbelief. For many victims, the hardest part was not the loss itself, but the moment they realized there would be no explanation. The system that promised transparency dissolved without ceremony. As complaints multiplied, authorities across different countries began receiving fragments of the same story. The details varied, but the pattern remained consistent. Promises of physical gold trading, guaranteed monthly returns, Dubai-based operations, and then disappearance. Investigators quickly encountered a problem that would define the entire case. There was no single entity to pursue. The schemes were fragmented by design, structured to dissolve the moment scrutiny appeared. Funds had been routed through layers of accounts, moving between jurisdictions chosen specifically for complexity. Some money passed through legitimate financial institutions. Some vanished into offshore havens. Some was converted into assets that were difficult to trace or seize. By the time alarms were raised, the trail was already cold. The absence of gold became impossible to ignore. No shipping manifests matched the claimed volumes. No vault audits confirmed investor ownership. No refineries recorded transactions at the required scale. The gold that anchored every promise simply did not exist in meaningful quantity. What investors had bought was not metal, but confidence. Some operators claimed they were victims themselves, blaming unseen partners or market disruptions. Others fled entirely, leaving behind empty companies and unanswered lawsuits. A few arrests occurred in different jurisdictions, often tied to secondary offenses rather than the core deception. Justice arrived unevenly, fragmented by borders and legal systems that struggled to keep pace with financial crime designed to disappear. For victims, recovery was rare. Assets had been drained or hidden. Legal costs mounted. Years passed with little progress. Many never pursued claims, exhausted by complexity and shame. Financial loss turned into psychological damage. Trust in institutions eroded. Conversations about money became painful reminders of betrayal. The most disturbing element was how effectively the scam had weaponized patience. There was no urgency, no countdown, no pressure to act immediately. Investors were encouraged to think long-term, to view delays as professionalism rather than warning signs. Time, which often exposes fraud, became the shield that protected it. The ecosystem adapted quickly. As one scheme collapsed, another emerged with a different name, different branding, and the same promise: gold trading, safe returns, Dubai. The pattern repeated because it worked. The city's reputation remained intact, even as it was repeatedly used as camouflage. This was not chaos, it was strategy. Fragmentation prevented accountability. Jurisdictional complexity slowed enforcement. Cultural trust discouraged skepticism. Each element alone seemed harmless. Together, they formed a nearly perfect environment for deception. The narrative around these scams often focused on greed, but that explanation missed something essential. Many victims were not chasing wealth, they were chasing safety. Gold represented stability in a volatile world. Dubai represented order in a chaotic global economy. The scam did not exploit greed, it exploited fear. The aftermath revealed uncomfortable truths about modern finance. Physical assets can be claimed without existing. Regulation struggles against stories that feel credible. Reputation can be borrowed, repackaged, and sold. And belief, once embedded, resists evidence. Dubai continued to shine. The gold souk remained busy. The skyline remained iconic. Legitimate trade continued uninterrupted. The city did not collapse because the city was never the criminal. It was the backdrop. The scam succeeded because it hid in plain sight, wrapped in symbolism powerful enough to override doubt. Years later, many victims still wait. Some hope for restitution. Some hope for acknowledgement. Most have learned that the illusion was never meant to be resolved, was meant to vanish. The Dubai gold trading Ponzi scams did not end with a single arrest or headline. They ended quietly, the way they began, leaving behind unanswered questions and empty promises. Their true legacy is not the money stolen, but the trust that was transformed into a weapon. And if you think this scam was thrilling, wait until you hear about the next one, because there are deceptions even larger and darker than this. And if you do not want to miss the next story where belief becomes the crime scene, subscribe to ScamSphere, where every illusion eventually collapses under the weight of truth.